And now I want to bring in Nicholas Weindling, who's going to talk to us about JPMorgan Japanese. Nicholas, thanks for joining us this morning. I know we've got you sort of live for a change rather than from Japan, because you're here for, important work.
Yes, great to be here in person. Nice to be here during the day rather than in the evening in Tokyo. So yeah, great to be here.
Just to kick things off, for perhaps anybody who's tuned in for the first time, not familiar with the trust, obviously we've written quite a research and we've talked about it sort of quite extensively before. But can you just give us perhaps an extended elevator pitch? Tell us how it works. Obviously, your team's based in Tokyo, isn't it? Which is, sort of differentiator versus some. So just tell it how it works and, what its USPs are and how you put it together.
All right, thanks. So JPMorgan Japanese, or its ticker is JFJ.
Yeah.
That is the largest dedicated Japanese investment trust in the sector. It has assets of well over £1 billion. We adopt an unconstrained strategy. So when we don't like things, we don't own them. And we grow across the entire market cap spectrum. So we want to take advantage of that investment trust structure, get some more smaller cap names in there. And we definitely have a quality and growth bias. Really, we're looking to be the go-to vehicle for anyone looking for exposure to the very best companies in Japan, particularly companies that are changing, because that's become incredibly important over the last couple of years and longer. We're going to talk about that. You're right to point out that one of the major differentiating factors about us is that me, Miyako Shumin, who are managing the trust, and all of our team of over 20 people are based on the ground in Tokyo. Now, I know you'd think that that would be how most people may do it, but it's actually quite unusual to be based there. It's important for a couple of reasons. The first one is that Japan is actually a very undercovered market by investment banks, sell-side analysts. So roughly half of companies in Japan have 2, 1, or 0 analysts writing about them.
It's a very deep market as well, isn't it?
It's an extremely deep market. There's in total around 4,000 companies in Japan, which just to give you an idea is roughly the same as the US. Now, of course, many of those companies are too illiquid. They shouldn't be listed. But even if you bring the universe down to what is practical, you'd still be looking at 1,500 companies. So it's a very, very broad universe. There's also a feature of Japan. You're obviously the same concentration. So even the very biggest company would only be roughly 4% of the index. And it very quickly drops off after that. So that's one reason why it's important to be there. Second reason is that we have got a team of analysts across all sectors. Now, historically, we would have had a preference for quality compounders, and those were concentrated in certain sectors. But because of the changes happening in Japan recently, massive changes in corporate governance, shifts in balance sheet, companies reorganizing their business portfolios, we actually find we get ideas in other areas we never thought that we would invest in before have become areas we're much more interested in. Because we have a big analyst team, it's not that we suddenly have to scrabble around for research. We know those companies very well. We've covered them for decades in many cases. And the analysts can pick up when there's, whether a more nuanced change to how the company starts to talk. We can pick that up very quickly and then decide, okay, we will do more work, or maybe this is something that might be appropriate for JFJ after all.
Excellent. And how many people working on this? It sounds like you've sort of quite a deep team as well. So
yes, we have to have a slide showing ugly mugs in my case, and not so ugly mugs in the case of everybody else.
Do that.
You push on one page. So we have a team of both fund managers and analysts, more than 20 people based on the ground. So I've been the lead manager of the trust now for well over 15 years, and I work alongside Miyako. We've been delighted to have Shumin Tao, who's a specialist in small caps, come on to our team directly on the trust. But we have all of the analysts you see on the bottom of the page. They're all our resource. Importantly, not only do we have the analysts in Tokyo who you see on this slide here, We also have all of JPMorgan asset managers analysts globally, New York, London, Hong Kong, Singapore, and so on. And in many cases, it's very important what's happening globally, for the auto industry.
Yeah.
We need to know about Tesla. We need to know about BYD. It's not just about Toyota, Honda, Nissan. So it's incredibly valuable. So you've got that knowledge on the ground, but we combine it with that depth of knowledge that we get for many of the competition for the Japanese companies are.
Makes a lot of sense. As you touched on it briefly with the small cap angle, obviously this absorbed one of its sister funds, didn't it, not so long ago? I guess that sounds like it's all sort of bedded in nicely. Is that giving you new ideas? Have you sort of been able to rotate the portfolio and get it to where you want it to be?
That process was extremely smooth. That's going back around 9 months now when we merged with JPMorgan, Japan's small cap growth income. There was a lot of overlap in the smaller cap portfolio. We did introduce roughly half a dozen other positions, which were very distinct stocks, which we just don't have exposure to those kind of ideas. But in other cases, often the larger cap stock can be the better way to express what you want. So that all went extremely smoothly. We really are going across the entire spectrum in terms of market cap. And so, we think, the very best ideas should be within the JFJ portfolio now.
Does this kind of work as a sort of one-stop shop for your Japan exposure?
Yeah, I mean, we certainly are looking, all the best ideas that our analysts have and that we have. We certainly are looking for companies which do have certain characteristics, or we think they may have them in the future. Growth, quality, strong balance sheets, excellent free cash flow. Now, they may not quite look like that now, but they're going on to look like it in the future. That's certainly a very big part of what we do, and maybe in contrast to maybe more value-oriented funds. But that's a very big part.
Makes a lot of sense. I mean, if we can just come back to talk about the corporate governance reforms, obviously the landscape's changing quite dramatically. I guess for most Western eyes, it looks like it's got sort of a long way to go. But how do you sort of manage that process?
I'd say for anybody watching, there is a single thing you need to understand about Japan at the moment is that there is nothing more important than the changes in governance that are going on. Things that I never thought that I would see in my career as a fund manager, Japanese equity fund manager, are happening. And it's surprising the extent to which it's already happened. If you go on a couple of pages, I think here, just to kind of put onto the next one after this. On the left-hand side here, we're looking at how dividends are growing in different markets. I think a lot of people are surprised to see that Japan, over the last 2 decades, have got the fastest rate of dividend growth of any of the major markets. Now, okay, we were coming from a very low base. I'd have been embarrassed to talk about it. It's 20 years ago. There weren't any. But this continues apace. Again, over at the outlook is for very strong dividend growth in Japan. We have got record share buybacks in Japan. That's the middle chart you see here. Already this year, we've exceeded where we were last year. We expect there's an awful lot more to go for. It's one reason why, and I think a lot of investors find this surprising. If you go back 2010 right up to today, the earnings per share growth in Japan is faster than the S&P 500. And that is something that people, because there's an image that
you don't think of that, do you?
It's a very, which is very mature economy. But we are investing in companies, and what matters is earnings per share. And things like share buybacks are really driving that, as long as alongside excellent company performance. During that time, obviously, US has become more expensive, re-rated. Japan is derated during that time. So you're looking at 13, 14 times the Japanese market overall. And then on the right-hand side, you see that there are more activists in Japan. Big difference for Japan today versus, let's say, 15 years ago is that the government, the Tokyo Stock Exchange, domestic asset managers all want the same thing as we do. And we are very active and engaging with companies. So everyone's pushing in the same direction. And that is completely different to 15 like 18 years ago when there was a famous example where activists came to Japan, the door kind of got shut in their face. And it's just not like that anymore. And companies we never expected to change are now really making very significant changes. You just go on one page just to kind of underline how, to your point, there's an awful lot more to go for. On the left-hand side, this looks at the amount of net cash on balance sheets in Japan. 50% of companies still have a net cash position. It is completely out of line to what you would see with Western markets. So we're really in a very early inning. And just to focus in on one point, which is what Japanese companies own a lot of shares in each other. Those are called strategic shareholdings. There is no reason for that, no logic for that. They should not exist. Companies are starting to unwind those at a much faster pace. If they sell those stocks, buy back their own, use the money to buy back those, just that one thing, nothing else, just that one thing will make the ROE converge to the United States. Just to give you an idea of how big the opportunity is. So it's a very exciting time, and I think still a long way to go.
Well, as you say, the chart on the left shows that there's still a lot more cash to use to deploy to these buybacks and actually really shift the dial. Okay. Where next?
Well, I think that one of the big things to talk about, I mean, ultimately, what's very important is performance. And the performance of the trust, pleasingly, has been very good over the last 1 year, and over 10 years, actually. We've outperformed by almost 2% a year. One feature of Japan over the last 5 years is that, unlike the US, which has been a very growth market, NASDAQ, Mag 7, everybody knows that story. But Japan's been nothing like that. Japan has been a very value market for the last 5 years. The few reasons behind that, one very big reason is because the yen has been weaker, very weak, in fact, and has pushed up the profits of companies that are in more difficult industries. Automotive would be one example. Now, we tend to assume those types of companies, but we're very little in areas like automotive. That's been a big headwind for us. Satisfying 2024 was a very good year for us. So far, year to date, it has been a very strong start, first half of the year. And I think what we have tried to do is, there are things happening in Japan. Credible corporate governance changes. There's also inflation, wage hikes. Let's make sure that we reflect that into the portfolio. It's not like we're existing in some different world. Of course, we're bottom up and down, but we need to, if we can find companies where we are getting that change in the business structure, change in the balance sheet, you're going to get the earnings growth, you're going to get a rating. Let's make sure that in the portfolio. And that's what we've really tried to capture. And, a classic example of that, in fact, if you go on to the next page, you can see, I think we have the attribution so far this year. But if you look at the top company there, which is called, and first I should point out that the top 5 companies here have all contributed close to 100 basis points or more of performance, which is a very good outcome for us. And it's really the stock selection which is helping. But IHI, which stands for Ishikawa-jima Harima Heavy Industries, that's why we call it IHI, because nobody can say it. That is a heavy industry company. We've never owned a heavy industry company. That company is a top supplier of aircraft engines into Airbus and also into the defense industry in Japan. We've never had any exposure to the defense industry in Japan, but just like here in Europe, big increases in defense spend in Japan, the future outlook is transformed, transformed. But at the same time, IHI has got rid of peripheral businesses. Now, those included pharmaceutical manufacturing, lawnmowers, cranes. There was a separate conversation about why that company would ever think to have a business portfolio that diverse was a sensible thing to do. But what matters is what happens from now on. The management get that, they shut those down, and they concentrate on aircraft engines and defense. It'll be a dramatically more profitable company. Free cash flow will be very strong, and that's what matters. And that's, and the fact that we're able to capture that, and we have a very high weight in the stock, has been very beneficial. just to give you a couple of other flavor color of what's going on there. Rakuten Bank, the next one down. Very difficult Japanese banks for us. It's extremely competitive industry. The mortgage that I have on our apartment in Tokyo, we're doing it that we're fixed rate 0.55%. I mean, it's and they are. It's so competitive. It's very, very tough. But there is inflation in Japan. Interest rates are increasing. Rakuten Bank is an online only bank.
Right.
And they can disrupt those big incumbent regional banks. They don't have the problems of the legacy branches and so on. And that is, I think for both of those reasons, one is that it's disrupting and gaining deposits, but also because of the changing interest rate environment, it's gone on to perform pretty well. So again, you can combine a very good story company, but combine it with something that reflects what's going on in the macro. That's the dream. And finally, a much more household name I should highlight, which is Nintendo there.
Oh, yes.
I hope you've either bought your Switch or you're about to buy your Switch 2 console. But Nintendo, I would argue, has probably the most valuable intellectual property of any company in the world, maybe alongside Disney. But when it comes to Pokemon or Mario or Zelda, you may play those games. Your kid may play those games. You may even play those games with your parents. I mean, that kind of family appeal. They've just started the Mario movie, which you were unfortunate enough to go and see last year.
I might have.
Or you go to Universal Studios now, there'll be a Nintendo part of that. These are completely new. And this console that we've just had launched is very different because in the past we'd always be a completely new thing. Whereas this is just an iteration. So you can build on the existing user base. We've also got huge amounts of cash, billions of dollars of cash at Nintendo. So again, that hasn't changed so far. Maybe, hopefully it will change in the future. Let's put that together. And I'll just finally comment on, not owning companies like Toyota. Now, what we know there, and because we've got our analysts globally, is we could name 20, 30 car companies off the bat. Very competitive. Chinese competition is a very big issue.
It is.
Now we know there's obviously this debate about tariffs, but even put tariffs to one side, it's still a difficult industry. We do not need to own those stocks. Big 10% of the market, approximately. We don't need to own them. So let's not own them. Let's focus on the areas where we think Japan is strong. We have the best ideas.
Cool. That makes a lot of sense. We're actually getting a few questions coming in on the chat. Probably some of these we've covered already, but I'll try and pick out probably some of the best. Just says here, do you have an exposure to the Japanese semiconductor industry?
We do. It's a very important exposure. In fact, if you just roll on one slide, I think you can get an idea of some of the themes that we have in the portfolio. Now, we're very bottom up, but it might help people to just try to envisage the kind of thing. You can see on the right-hand side there, we've got hardware technology. This is overwhelmingly in semiconductors. The reason for that is that we don't have NVIDIA. We don't have TSMC, but we have the suppliers to them. And in some cases, they have 100% market share. Give an example. One of our biggest positions is Advantest. Advantest tests chips. It has 100% share with NVIDIA. That is a global duopoly, though, with a company called Teradyne in the US. Now, we have a very experienced analyst in the US covering Teradyne. We have our analyst in Japan covering Advantest. We know that Teradyne is losing share and Advantest is winning. And when we can take the two, what we hear in the US and what we hear in Japan, put it together, incredibly powerful. And we will really push on those kinds of stocks. Advanced beyond Tokyo Electron, global #1 in semiconductor production equipment. These are, and we're big believers in how technology is changing, the opportunity from artificial intelligence. And for us in Japan, the hardware area is probably one of the biggest areas that we'll invest. So absolutely big exposure for us in semiconductors.
Excellent. Okay. So with a big focus is kind of related on industries like electronics, machinery, how do you deal with how do you factor in global supply chain issues?
And the Japanese market overall is a relatively cyclical market. So the Japanese economy looks like most mature economies.
Yeah.
In fact, very mature economy, big service sector.
Yeah.
The Japanese stock market has many more cyclical companies.
Yeah.
That means autos, machinery,
Yeah.
types of industrials. So it is a very geared to what's on in the world. If we just take what is an issue right now, tariffs. Tariffs will be a significant issue for some Japanese companies. Personally, because the big focus on autos. And we don't own any US exposure to it. But for the market, that is an issue. Secondly, those tariffs could cause, haven't seen it so far. It's possible it could cause the global economy to slow down a bit. That could have an impact. Thirdly, and this is something that we really spend a lot of time thinking about, is that if Chinese products, there's a lot of capacity in China, if they're not going to go to the US, they will go somewhere else. And that is a major concern for us. So we see that autos are, if you go Southeast Asia, Latin America, you will see a lot of Japan has huge market share. There are more and more Chinese cars. If you look at things like personal goods, household goods like nappies or and so on. In Thailand, Japanese companies are very strong. More and more Chinese competition coming in, pushing the price down. We have to be very careful. Cosmetics, skincare, and these are all areas where we have a big concern about Chinese competition. Very helpful to have our colleagues in Shanghai. We are watching how the market shares are shifting between the Japanese and Chinese. I would say overall, there's all kinds of geopolitics, tariff, all kinds of things we can be concerned about. But for us, I would say there is no single bigger issue than competition against Chinese companies. And we'll look for companies where we think that there just isn't something like Nintendo. It's not not really concerned about it. But overall, that is a big concern. And if you compare our portfolio to 6 or 7 years ago, you can see our exposure to China specifically down significantly.
No, that makes a lot of sense. And just using Nintendo as the example, obviously, it's tending, the consoles are slightly different, but a lot of its products are so effectively delivered as services, aren't they? And you've got this sort of really heavy intellectual property. I mean, are they sort of kind of themes? I mean, I get the feeling that there are things generally within your portfolio to have that sort of high level of IP. I mean, does that give you sort of protection from tariffs?
Yeah, those are relatively more protected. There may be some tariff on the console, but what's important is the game's downloaded in general these days. That does. Or another company people might be familiar with, which you have a big position, is Sanrio. Sanrio is a Hello Kitty cat. The cute pink cat, probably not so subject to tariffs. So yes, and I think actually Japan has become cool. I'm not sure it was a deliberate policy, but you can see it when I'm in London. Look at the number of restaurants. Look at the number of fast food, sushi, noodles. It's everywhere.
So many people want to visit Japan. You just see
tourism, isn't it? I mean, I know your colleague James was there recently, but in 2012, we were looking at roughly 10 million tourists coming to Japan a year. We will go well over 40 million this year. I mean, for me, living in Japan, the single most visible change that happened, and I've been living in Japan for well over 20 years until now, the single biggest change is that you see tourists. I mean, people used to go on business to Japan. They never went on holiday to Japan. And those tourists are from everywhere. They're from Asia, where there's growing middle class who can afford to travel.
Absolutely.
But they're also from the Middle East, India, Europe, the United States, Latin America. And that's because people have worked out that there are 3 times the Michelin star restaurants in Tokyo compared to Paris. The best powder skiing in the world is in Japan. Incredible temples, the beaches in the south. I mean, I'm not even paid by the Japanese tourists. It's a great place to go. And also has become very cheap. Not to get there, but once you're there. I mean, we were just talking before about, I get the tube over here. It cost me, I don't know, £5 or £6. It cost me 75p to use the tube in Tokyo. I mean, things feel like the wrong price, and that's another reason why Japan has become a very a place that many people
makes a lot of sense. Okay, so it's quite interesting because we were talking about the corporate government angle. given the changes to corporate governance in Japan, will we see the level of dividends continue to increase generally? And will this sort of impact the trust's policy? Dividend policy really is a matter for the board, isn't it? But what's your thoughts on the direction of travel for dividends? And I guess dividends versus buybacks.
I think both of them will continue at pace. Actually, I think it's got a long runway. Companies are still extremely overcapitalized. When we talk about the amount of cash Japanese companies have, we're not talking about companies which sit there with $50 million in the balance sheet or $100 million. We're talking about billions of dollars of cash or equities that are sitting on balance sheets. One reason, what's quite interesting is to take a step back and say, well, why do companies have they manage themselves like that? And that is because a lot of Japanese companies, famous ones, people, if we walked around the street and learned to name a Japanese company, the kind of things people would say, they were founded in the 60s, 70s, around that time. They went through that period of the bubble when real estate prices, famously the Imperial Palace in the center of Tokyo, where I go for my run at lunchtime, was worth more than the entire state of California. And property prices fell 80% from that time. And that meant that the banks in Japan, for roughly 15 years, were basically bankrupt. So you could not borrow money for the banks. And so many companies, we will just look after ourselves. We're not going to use banks. Now, that generation, they are now passing the baton on to a younger group who are not so affected by that, which is clearly a traumatic experience. But that new cohort, they're not so affected by that. And so what you have is, yes, there's the corporate governance changes in the policy. Yes, there's government pressure. Yes, there's pressure from the FSA and the Tokyo Stock Exchange. Tokyo Stock Exchange is very important. But there's also this demographic shift anyway. It naturally moves on to the next generation. And that's one reason which gives us that. One thing we look for actually is when there is a change from maybe a founder in a company and it moves on to another generation or to somebody from outside the family. That can be often a big reason for us to go and look at again. Look again at the stock. I think maybe this could be the thing that triggers change here.
I suppose go back to sort of corporate governance, because one you mentioned, but also it's such a sort of factor here. Guessing this is sort of something that you look a lot, but are you necessarily looking for perfect companies, or are you also perhaps looking for things where actually maybe they're not perfect yet, but you can see the building blocks are in place and that they're changing? How do you balance all of that?
I think that's something that we are increasingly doing within our portfolio. So there are companies which not perfect, but they are global number one and very high margins and great free cash flow. That is excellent. Of course, I love that. I mean, the price is right. Most fund managers are going to go for that kind of thing.
Absolutely.
But if we can find companies on the path to quality, get that early enough where you start to pick up those signs that something's changing, and it's very important there's a business within there that you want. The best example of this is a company we own called ASICS. ASICS is the global number one in running shoes and tennis shoes. We've owned that stock for coming up to a decade now. Probably in 2017. It's been a 10-bagger for us. It's by far not. I mean, when you look at performance, what you really want is a big winner, and ASICS has been a huge winner. But when we bought ASICS, it was loss-making. They were competing directly with Nike and Adidas in fashion sneakers. They were losing share, losing money. They brought in management from outside. They said, we're just going to concentrate on our running shoes are our thing. We're just going to concentrate on that. Forget that. They shut down retail stores. They said, we're going to stop doing stupid things. All the stupid things. And I'm like, well, we sponsor the Japan swim team, but we don't make swimwear. There were these, I think that's that kind of definition of low-hanging fruit. So they did that. Margins started to go up more recently, and this underlines the importance of our global team. It's become obvious that Nike and Adidas are struggling. Nike just changed their CEO at the beginning of this year. We knew from 24 months ago that Nike was not just losing to ASICS, but other brands like Hoka, On Running. That you see it around everywhere here. And the margins, when we originally thought the margin that ASICs might be able to go to 5%, then we thought 10%. ASICs are now making a 15% operating margin. I mean, it's completely transformed.
Yeah.
So when we're looking for those companies that are changing, it is very important that at the core, there is a strong business.
Yeah.
Or it's a strong brand. It's just being mismanaged. Whereas other ones, it can be a bit like rearranging chairs on a Titanic. If you're a print ink maker, you may have the strongest balance sheet in the world, but people don't really print. And that's a problem if you print it. So we have to, it's not like a company says restructuring, we're like, oh, wow, we need to make sure that there's something in there and the management understand that that is the thing that we're going to focus on. But when that works, it's very powerful because you get earnings growth and a re-rating.
Yeah.
That's powerful.
But this is all made possible. It comes back to the depth of the team, doesn't it? Picking up on these sort of subtle nuances early. Interesting one here. What is the smallest size of company you would invest in?
Rather than small size, we would, if there's a small company but it's got good liquidity, there's no issue. The liquidity is important. I guess we would go think in the investment trust, because it can go down, it does have that ability to go market average. I guess the very smallest in the liquidity, we wouldn't really want to go below $1 million a day. That would be right at the very lowest end. But some big companies aren't that liquid, some small companies are very liquid. In fact, one of the companies that that's done very well for us, doesn't appear in the top 5, done very well for us this year, Mitsui E&S, only has one sell-side analyst covering it. Mitsui E&S stands for Mitsui Engineering and Shipbuilding. Key thing to know about them is they stopped engineering and they stopped shipbuilding. As restructurings go, that's pretty big. And they now focus on ship engines. Ship engines is a great business because recurring revenues, maintenance, free cash flow, all of those things that we're looking for. And also they make one of the only companies in the world that makes cranes for ports. Now, port cranes, that market is dominated by the Chinese. One Chinese company. But in the US, they've said that we will not have our cranes supplied by the Chinese. That was Biden, but continued on by Trump. And we must replace our existing cranes as a security risk. Well, there's only 3 companies they can come from. One is Mitsui E&S. So when we'll go and look down in that part of the market cap, and that is because people aren't looking. It can be very, very rich hunting grounds.
Makes a lot of sense. I suppose this is worth talking about because it seems to be on sort of everybody's lists. So a shrinking population of Japan is well sort of documented. That's what we're talking about. Perhaps we can tie that more into the demographic changes. But as robotics and AI are expected to play a large part of the economy, including care of the elderly, sort of what are your thoughts on these sectors?
Right. So
I mean, these are robotics and AI. These big areas, aren't they? Really?
They are. I guess the thing is that when I watch the news here in the West in general, people worry about robots and AI because it's going to take my job. What would it mean? But in Japan, the working population is falling. The number of people is all. Japan's not alone in having a demographic with the population falling, but it is particularly acute in Japan. It is the country that has it first. Well, okay, we will do things like about that. For example, the female participation rate in Japan is dramatically much higher than it is in the US and most of Europe. Now, there's an issue on the roles that women have, the seniority, but still, it's been increasing. You see the highest percentage of people in their 70s working is in Japan. You definitely see some stance of immigration. I wouldn't want to over-egg that, but still, I walk into a shop, into a convenience store in Tokyo, there'll be no Japanese staff. I mean, that's unthinkable a decade ago. But robots and AI are a potential massive solution for this issue. And so I think also because Japan has strong companies in areas like robotics, much less skeptical it could be great. Japan's a bit slow to adopt some new technology sometimes. But the question is right, that it does offer opportunities.
I don't think we should really touch on this, but somebody's asked, can we sort of talk about gearing? So I guess sort of what's the policy? How much do you use it? And obviously, fundamentally, it's a board decision, but it's sort of part of that discussion delegated to you as the managers.
Well, I agree with the board that one of the key features of the investment trust structure is you can give. Right now in JFJ, in the JPMorgan Japanese Investment Trust, we are around 12% geared.
Yeah.
We've been around that level for a while.
Yeah.
We are using a combination of very long-term debt and CFDs.
Okay.
Do that. It's a function of, do we have good ideas?
Yeah.
If we can find good ideas, absolutely have to have them.
Yeah.
We could increase the gearing from that level, but that's where we are.
That makes a lot of sense. Just a couple of stock specific things here. Do you own Uniqlo? And if yes, why? Or if not, why? No.
We do own Uniqlo.
Yeah.
The owner of Uniqlo is Fast Retailing. That's the stock that you would see within the portfolio.
Yeah.
It's Fast Retailing, but the brand is Uniqlo.
Yeah.
Uniqlo, I mean, it has a tremendous growth opportunity.
Yeah.
Yes, it's very big in Japan and in Asia, but it's very new relatively in Europe. I was looking on the BBC the other day about the queues to get into their new Liverpool store that's just opened. Very big opportunity for them in the United States. I mean, if you compare them, which is how we would do it, so look at Zara, H&M, Uniqlo, and look at the potential growth. And Uniqlo, I think, has somewhat less fashion risk within it. Be it something that a lot of people go for their kind of staple items.
Yeah.
I'm wearing 3 items of Uniqlo right now. Yes, that's why we still see, I mean, very well managed company, and most of all, a tremendous growth opportunity as it goes outside of Asia.
That is really interesting. Probably a pretty much related question. How easy do you think it is for companies to Japanese companies to do the sort of kind of thing that Uniqlo is doing, to sort of move beyond their own borders?
There's a group of Japanese companies that have been incredibly successful at that. Industrials, robotics, Japanese trading companies. I mean, even in the last week, there's been a number of deals done by big Japanese trading companies buying, I think, the salmon fishing company here in the moment in Scandinavia. So they are doing, Japanese companies extremely successful. It's not some big secret that the Japanese population is falling, or that the economy is growing at a small rate. But everybody in Japan is aware of that. The companies are aware of that.
Yeah.
And one of the obvious solutions is go overseas.
Yeah.
They have, whether it's Nintendo or Sony or Panasonic, everybody knows these companies, right?
Yeah.
These have been overseas for a long time, and I think I'm sure they will continue to be. Maybe it'll be a different type of company. Yeah. Maybe it will be more like intellectual property. Yeah. Or these consumer brands. I mean, talk about assets, something like Shimano. If anyone listening goes cycling, they've got 80% market share in gears for bicycles. I mean, incredibly strong. Yeah. Competitive positions. I mean, those are the types of things that we all look at.
Excellent. So that somebody wants to build their own portfolio. What parts of the Japanese market do you think most investors are still missing or undervaluing? Or is it more of a stock thing, I suppose?
Yeah, I mean, a lot of it is stock, because as something changes at a company, that can be a big reason to go and look at it fresh. I mean, if you look at these themes that we have on the slide on the screen here, I mean, an area which we would have had 0 in 12 months ago, but have now got 11% in, is defense. So that's a very big shift. I think that is still very underappreciated compared to, I mean, I look at stocks in Europe and how they've performed and the valuation people ascribe to them. And I look at similar companies in Japan. Yeah. I think I feel that is a very new area. Like when we used to meet companies related to the defense industry, when they were supplying the Japanese self-defense force, because Japan doesn't have an army, it has a self-defense. Yes. The company, ask them about profitability, and the company they do. And then we kind of think about the degree of the loss that they were making from that business. Whereas now the government understands you may not be able to rely on equipment from the US. You need to have your own industry. And if you want to encourage companies to produce, you need to allow them to make money. Otherwise, they're not going to do it. And that is a game changer. In Japan's defense spending is on similar. It's still behind where Europe, it seems like it's going to, but it's on a similar trajectory. And that is a very big change and an exciting opportunity.
So is there any other similar sort of fundamental shifts that you might highlight?
I mean, when you look at Japanese companies, one of the biggest differences versus those that you see in the West is that most companies operate multiple businesses.
Yeah.
Now, and that leads to conglomerate discounts.
Yes.
And as companies, workforces get older and retire, they cannot keep going with these businesses, which maybe they're against very small amount of profits, but they're not good for the overall business mix. They're depressing returns, and so Japanese companies are being forced to get rid of these peripheral businesses. If we could have more companies focused on one business, that will lead to them re-rating. Like, nobody wants to sit down analyzing a business with 9 segments. I mean, if it's I don't want to do it. Nobody wants to do it. Those types of companies, and IHI is our biggest position at the moment. That is a very good example of a company that, as they shred those peripheral parts, people can see, okay, this is what we get when we buy this. And it should trade. It shouldn't trade on 15. It should trade on 23 or whatever.
Yeah. Just sort of question here on debt, but I think this is sort of much less an issue really. But obviously we worry about UK debt levels here. Is there a risk Japanese debt can harm the corporate sector? But I mean, the obvious answer to me, you're obviously much more an expert on this. I was trying to see how it would, just because they're sitting on these big cash piles, they don't need it in the same way.
Corporates don't have debt. Overwhelmingly. Not, but overwhelmingly, they have extremely strong balance sheets. The debt sits with the government. So there is many governments, whether it's the US or the UK, a lot of spending. Where you fund it from. In Japan, it has that issue as well, but it is not. It's not something I think is an issue for the corporate sector. And we are investing in corporates listed on stock market.
Sort of, it's related question. We've seen the UK stock market shrink with companies leaving the listed market. This is a sort of future concern in Japan. I mean, almost sounds like you need some consolidation, really. So
1,000 companies in the market is such a crazily high number. Last year was the first year in 20 years we saw the number slightly tick down. Massive. That is big, but it is so far away from being a concern. The market needs tidying up.
You need to unwind these cross holdings, rationalize, consolidate.
Through private equity, through MBOs, all of these things are happening. Hostile takeovers, which you've never seen before in Japan. These are all good stuff, but it is so far away, like it is here.
I suppose it kind of relates to this. You were talking about this sort of increasing activism earlier. You guys very much engage with the companies you invest in, but sort of kind of, what's your approach there? Well, you're not sort of full-on activists, are you? But I think you're sort of much more engaging behind closed doors.
So we have 3 dedicated people, which is bigger than many whole Japanese equity. 3 dedicated people just to ESG voting. You're right that we may not have our name on the front page of the Nikkei or the Financial Times, but we are aggressively engaging behind the scenes and also voting. We are very big in voting against shares. So it's a different approach to some others, but we are absolutely pushing that agenda hard, and we're able to because we are fortunate to have a big resource.
Got a lot of firepower, haven't you? So how do you choose which companies to invest in when Japan's economy is changing so much? I suppose that comes back to the sort of depth of the team and just really understanding.
It does. I mean, I've obviously picked out the areas which I think are great, but it's not all a bed of roses. There are areas which have bigger issues. Companies facing competition from China, those are things that or even domestic companies. If you look at things like railway operators in Japan, now, as a consumer, Japanese railways are incredible. I mean, they don't have delays. you go to take the train 500 kilometers to Osaka, peak time, there's going to be a train with 1,500 people leaving every 2 or 3 minutes. Of course, it's an incredible service. But we know that the number of people in Japan is falling, the working population is falling, and we know it's quite difficult to hike prices on tickets. That is a very, very tough combination. And we just don't need to be there. We have plenty of ideas. It's a great market for picking. We can just park those and look somewhere else. No, that makes a huge amount of sense. So enjoyed this so much. Time's run away. So just realised that we've ticked over midday. So as we sort of come up to the hour, just basically sort of tell us why, obviously, JFJ and why now? JFJ, the biggest in the sector, huge resource based on the ground in Tokyo. We're going to use all the tools in the investment trust structure to go right down the market cap, get the absolute best ideas in. We're going to capture those changes that we are seeing right now, the corporate governance changes, the inflation, wages going up, consumption possibly improving. Get that into the portfolio, capture that, capture these companies that are going global, these cool Japan companies. Let's get them in the portfolio. So it's a very exciting time for the trust. I think that our performance has been good, and I hope over a long period of time. So that's the kind of proof of what I'm saying there. And then for the Japanese market overall, well, we've seen, big re-rating of the US market, Europe recently. Japan still, that's not really reflected. The fact that Japan's got the best earnings per share growth of any major market in the last 15 years, that's not been at all reflected into the valuation. And the most important thing, that corporate governance story, which is so important, we're still at such an early stage. This is not going to play out in the next 9 months or whatever. I think the pace will increase, but it's certainly not too late. Marvelous. Well, look, thank you for joining us in the studio today. It's been really exciting to have you here in person and just talk about this. And obviously, we've had you on before, and I hope we can get you back in another year or so and find out how it's all going again. Great. But thank you very much. Really, really good. Very quickly, I just need to look forward and talk about. So once again, obviously, we've got the disclaimers here. When you get a moment, you sort of read those because, as I said before, they sort of are important. Safe right there. There's all there. You can sort of pop back and look at those again later. Next week, we've got a sort of special, which sort of publicly plays funds on big discounts. So hopefully see you next Friday for that. But thanks very much and have a great weekend.